All right, welcome everyone to a simulation session. Today, what we're gonna do is, so we're obviously gonna simulate, but I think we're gonna simulate pound yen. This is all. It's gonna be on risk management, right? Let's say your price goes in negative and you want to cut down your risk. You want to make sure your losses are smaller. So we're gonna see if the market presents us with some ideas regarding that, and then we're gonna continue on with those concepts. Also, obviously, we're gonna be looking at breaking down high time frames to lower time frames and identifying next zones where price can go. If we have news coming in, I think what we're gonna do is so we're gonna do a date which will be an NFP date as well, so we can trade NFP as well in this simulation. So first of all, we're gonna pick up a random date, and then we shall continue on from there with the Zoom chat. All right, this is the Zoom chat right here. What project was that you posted on Instagram? Project? There was no project. I don't remember what I posted on Instagram. All right, so let's start with, let's go to April 2021. And then this, we're coming into February 2022. Let's do the fourth date right here. So we're only going to choose Sundays because Sundays is when the market is opened. And we're going to get 20, let's get 30 dates over here so we have more options. Oh, number can only be between 1 and 25. Okay. Someone said something about NFTs. Was that true? Oh yeah. But I didn't post anything. I'm not sure where you guys got that idea from. It was just like a concept in my mind. So nothing's being done at this point. All right. Oh, okay. So we got these dates right over here. So let's do 18th. We got 31, 24th. Let's do October, 31st October, because then we're going to be moving into November NFP here as well. But I think it's pound yen, so pound yen NFP won't really do anything. So, okay, yeah, let's do October over here, 31st October. Any suggestions? Probably, I'm gonna wait for suggestions for dates. Going once, going twice, going 2.5. Oh, November? Okay, 14th November. 12/9. 12/9. We don't have 12/9. Oh, this right here. Okay, 12th September. All right, perfect. 12th September, pound yen. So we're going to go to new simulation and 2021, September 12th. So we're going to do pound yen. Starting balance, we're going to do, let's do what? 7,000. 7,000, this will be New York close. Leverage, we'll do what? 400, whatever. Real spread, history back in the charts, 300 days. We want to see, oh, actually, we want to see the maximum. Let's do 350. I'm not sure how well past that it's going to show, but yeah, that's fine. 350. So we're going to start simulation now. Okay, so this is the first time I'm using this new version here. Ted was talking about looking at the past 100 days candle move and what time. One day, can you do a simulation of what Ted was talking about? No, I can't. Only Ted knows what he was talking about of the past 100 days. So, yeah. Okay, weekly, daily. Actually, we don't need the weekly. Daily, 4 hour, 1 hour, 30 minute, and 15 minute. That's it. So we have nothing open on the side. Let's close this right here. And let's start opening up our 15 minute. There we go. 50, oh, big gap over here. 30 minute, 1 hour, 4 hour, and daily. There we go. Now we have a big gap here. Let's first talk about gaps. Why do gaps happen? I'm sure most of you know why gaps happen, but some of you don't, and also it's like a good refresher as well. Whenever price is moving, so here's what happens. One, you have. Let me bring something up over here. So one, you have the market, right? You have the market. This is the market right here. Then you have the broker, right? You have the broker, and then you have the trader. Mr. T, this is the trader. When the markets are open, the broker can see the prices being changed on the market, and that's what the broker shows to you. They're like, okay, we can see that the prices are changing, and then they show you how the prices are changing, and you can see the candles move, and prices change, and price move, and make trades, and all that. Perfect, right? But whenever the market is closed, let's say on Saturday and Sunday, obviously the prices are still changing at that time because there are some fundamental events happening, and then like the markets are still moving at that time. So whenever you have some sort of a news event or some sort of an announcement happening on the weekends, that's something that we will not see happen, because when price is going to open, let's say on Friday we closed at this price, which was hypothetically speaking 152, let's say, right? And when the market opened, we opened down at 151,830. So the prices between this we couldn't see because the market was closed. And when price opened, the next price the broker got was 151,830. And that's what the broker showed you, the price that, hey guys, this is where we got the price. This is how, slippages happen, and stocks get slipped and news events happen. And whenever we see big gaps and stuff like that, so that's how it's happened, because the markets are closed and we don't see the prices, and when the markets open up back again, when we get the next best price is what we see from our liquidity. Does soft forex only work on Windows? Yes, only Windows. Okay, so let's go towards, so the idea is going to be simple. So we're just going to forward a few candles here, and one concept I'm going to look at, and that's going to be, okay, let me bring up something more over here. We want charts. We want line studies. Yeah, that's it. Right? So this is a support. Before the day closed on Friday, this is where we formed support. On Sunday now, well, new day, when the market is opening, we see the price gap below the support. Now, technically the idea should be that, okay, if price broke below the support, this means over the weekend something happened and price broke below this area. Now, technically, theoretically, we should come up, retest this area, and then continue pushing down. So this is the only idea we're going to look at. If it breaks above to go up, then so be it. And then we're going to go over to our, pre-New York and so on and so forth. So let's take a look at this. Okay, so look at this 1 hour candle, came up, rejected this. Now the next one, next one gapped all the way up over here. Interesting. Yeah, so we gapped above this area, which means we broke back above the zone. So now you get the point, right? But if we would have rejected this area, then we could say, okay, what, over the weekend we broke below support, we rejected this as resistance, and then we should continue down. But since we broke above it now, then it's going to respect this level here as well. All right. This is London Open, an hour after the London Open, 4 a.m., 5, 6. So this is 6 a.m. Eastern at this point. This is the time when most of us are coming on to the charts to see where prices are going to go. So let's take a look on the daily here. Now, looking at the daily time frame, we can clearly see that we're creating a support, and then we also have a resistance forming on the daily, and we can see how the daily candles have been rejecting this area, rejection, 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 rejection. At one point, this was above 152, 190, but it closed below this. Now, we don't know whether this daily candle is going to continue up to fill this wick, or will it reject it the way it rejected there before as well. We just don't know that information yet. So let's take a look on the 4 hour time frame. Looking at the 4 hour, we have some more information. We have obviously, this is where the market opened. And after that, we have a support form right over here. Now, for the 4 hour to continue moving up, let me just scale fix this here. Scale fix. All right, perfect. So now if we want this new 4 hour candle, which just started an hour ago, to continue moving up, we needed to break the high of the previous 4 hour candle and have this full range to continue on to 152,500. This is a 30 pip range, right? This is going to be a very, very good idea, because on the 4 hour we have clean range, and with volume and pre-New York and New York Open, we could possibly get that move. But right now, we're just waiting at this point. Looking at the 1 hour time frame, now we have some more issues. And the biggest issue that we see here on the 1 hour time frame is that this 1 hour candle closed bullish at this resistance. The next 1 hour candle, we want it to wick down, break above this wick here around 152, 200, and then continue pushing up in this, yeah, it's like a 12 pip range over here, but then above this area we have a bigger range. Perfect. Let's clone this over to the 30-minute time frame, get more information. Now on the 30-minute time frame we have some more information. Let's scale fix this here as well. Perfect. So if we can break above, I think there's a possibility we can continue, so we're going to see. We'll see how we break above and if we can actually position ourselves to execute a trade at that point. But for it to be an actual trade, we need price to wick down first, create a liquidity wick, and then push up. Sometimes, guys ask, okay, why do we need a liquidity wick? The reason why we need a liquidity wick is that liquidity wick kind of like denotes that price is now grabbing orders to the opposite side to continue moving up like a rocket ship. And also, if you look at the candles in the vicinity, you can see that this candle here has a top wick and a bottom wick, right? Same over here, same here, same this one, this one, this one, right? So if the candles next to them have wicks to the top side and to the bottom side, that's how the new candle should look, And even if you look at the way this candle is forming, it just broke above the high of the previous two candles in the first 20 seconds. So this is not enough time for us to say that, okay, price is going to go up. And even though if it does push up after this, that's totally fine because we're waiting for something that we want to see, so that's the most important thing. So you can see right now we're pushing up in the first 2 minutes. This is an area of rejection here as well. So I'd rather want to see a price basically break and close above, do a retest, and then continue up. That is going to be much better. Why sometimes you're executing when price does not have a wick in the opposite direction? It depends on a couple of factors, right? I did that on gold. There was a lot of range. There was a lot of volume. Here, there is not enough range. See this? It's like a 11, 12 pip range minus spread. You got 10 pip range. Nothing. So this, even if it moves up, that's totally fine. That's no issues at all. We're just gonna wait for price to create some sort of a retest or something. But now, here's what we see, right? To the left hand side, we see that this is a huge rejection area. So we don't know whether we will break through this area or we're going to reject this area. That's something we don't know. So that's what we have to wait for here now. Because we just don't know. Let's speed it up here a little bit. We're coming up to a 15-minute candle close. Now, this is going to be amazing because if we're rejecting, all we got to do is retest down at 152, 180, and then continue pushing back up. All right, speed it up here a little bit more. Gotta wait for the 30-minute candle to close. Actually, let's move it forward to the 30-minute candle close. There we go. That's the 30-minute candle close. Now, this is a rejection. Excuse me. This is a rejection right here because you can look at the body of the candle and you can look at the wick of the candle, right? The wick is way too big than the body. So this is a rejection at this point. Looking at the 15-minute, we're also rejecting this area here to the left-hand side. So it's pretty good because if we can come down, create support, that's going to tell us that, okay, now we're creating a support to potentially continue moving up towards, let's say, 152, 400. And at that time, we're going to be moving into close to New York Open. So that's going to be something on our side. So I think it's very important to wait at this point. because this could very well be another range here. It's like a 10, 11 pip range. So these are the days where, like, traders can lose a lot of money because, there's less ranges, consolidation, a lot of problems, and it just gets very, very confusing over here. We got around 15 minutes left here for the price to close, and so we're going to see how price closes here. And then potentially we can take some trades to continue, but yep, let's see. Otherwise, this could get very, very, very tricky. And we're about to close in 3, 2, and there we go. Right? Nothing. Nothing at this point. Absolutely nothing. We need a retest. Retest, create support, and then go up. I remember trading on that day. I lost money on that retracement. Oh, then I think this is a good refresher here, based on the based on the mistakes you made. Oh, all right. Okay, let's do this. See the 30-minute candle. Now we're coming back in the range. This would be a fake out if this candle it closes below this range. But this is also very, very tough over here, man. This is like a 13 pip range. The reason why this will not be a tradable fake out is because one, we need a retest of this zone we broke into, and second, this is not enough. It's like a 13 pip range. For you to trade any range, your range has to be 20 pips minimum. 20 pips, 25 is better, 30 is awesome, 35 very, very awesome, right? So now if you take a look at the chart right here, what's happening is that we created a high, right? Because whenever you're looking at the charts, you're looking at the most recent price action zones created, right? Our most recent price action zone created at this point is, let me bring this here, okay, is right here. This is our most recent resistance formed. And now if we create a support over here, then we could probably move our this zone down over here as well if this candle closes bullish, and then we can anticipate the next ones to continue pushing up. But we have to wait for this candle to close here, obviously. Oh, there we go. Candle has closed bullish. This is NY open. And if this is NY open, there has to be some sort of volume coming into the market, and that volume should potentially continue pushing price up. So this is where we have our support at this point. Right here, we have our support. We have our resistance right here. Looking at the 15-minute time frame, 15 minutes is very tough. 30 minutes like this. 1 hour candle is rejection right here. Now, this is where the analysis gets very, very interesting and amazing. And the reason why I say amazing is because look at this logically now. On the 1 hour time frame, we had resistance, rejection, right? Candle broke above. Next 1 hour candle broke below this area, but it closed above the same resistance, which now turned support. Now, there's 2 things you can do. One, you can wait for this new 1 hour candle to break above the high of the previous one to potentially continue pushing up, or you can look at confirmations on the 30-minute time frame and use the time of the market on your side to potentially take a trade. So looking at the 30-minute, this is the high of the 1 hour candle. If we can probably justify an entry right here and anticipate the NY open to continue pushing price beyond 152.260, I think that's going to be a very, very logical move to make. So that's what we're going to do at this point. So we're going to start with around 1%. Stop is going to be below the previous candle around, like 10 pips away. So that's what we're going to do. Around 10 pips, we're going to take a buy. And yeah, if we break this low, it's no trade. But the things I explained, that's the only reason I'm taking a trade. So if someone asks, are you not worried about this? Yeah, I knew it, right? You're not worried about the rejection range too small. Brother, did you listen to the explanation? The whole explanation I just did? That's the reason I'm taking the trade. And it's also NY Open, so volume in NY Open should continue driving price up. Oh, look at that. Let's take a look at the P&L right over here. We gotta focus on, okay, so here we go. We're about 6 pips, 5 pips. We're gonna secure around 10 and then we're gonna, so now this move is only based off of the NY Open. That's it. The 30-minute candle is still open. We got about 9 minutes into the 30-minute candle. I think there could be some sort of more movement here to the upside. As we continue on to the NY Open, I think price should continue on towards at least into 152, 300, 330. The only problem is as it starts moving and the volume dies, this area is what we got to be careful about, even though the range was smaller. But, you know, with the smaller risk, I think it made sense. All right, there we go. We're coming up towards 9.8. So we're going to secure around 90%. And then we're going to let the rest run. Stops at break even. And that's it. One trade for the Monday. Waited. And we are continuing up. Now with volume, if it continues pushing up, then that's awesome. And even if you look on the 1 hour, we can take a look at right here. We broke above the high of the previous one. Now, for price to continue moving, we really have to push through this wick to the left-hand side. This is our smoking gun here. If we can push through this area, then we're on our way towards, 152, 500. If we don't push through that area, then it's going to get very difficult for price to continue pushing on. This trade is largely banking on NY volume. Yes, NY volume. So, okay, let's let this run over here. And oh wow, look at that! The 30-minute candle we closed bullish. This one has to respect this low and continue pushing up. Oh, we got stopped out. Well, oh wow, so that was the Monday right here. Took one trade, 0.8%. That's it. Let's move on to the next day here now. Going to the 1 hour time frame, and then we're going to move on to the next day. So wow, we basically just consolidated here. This is London Open, 3 a.m., 4 a.m., 5 a.m., 6 a.m. This is 6 a.m. Eastern right here. Let's do another breakdown here. How often do you look at the monthly and the weekly? Maybe once a week. Yeah, once a week, because the weekly candle starts every new week. I look at it maybe once a week. That's it. Okay, so looking at the daily is pushing up. There's volume right here, as we can see, and we're breaking above the highs of previous wicks at this point. We also have some range here to fill around 45 pips, 44 pips. So now looking at the daily, the trend is bullish, right? We're in a bullish trend. We have a bullish move. Daily is making those moves to potentially continue on towards 153.13. So let's take a look at that on the 4 hour time frame. Looking at the 4 hour, this is much more interesting now. Let's zoom out here a little bit and see what we can see to the left-hand side. Looking at the 4 hour, we had a resistance at this point, 152.520 or 152.500 to make it easier. Extending it to the left-hand side, we had the same resistance. Now, looking at this new 4 hour candle, it seems like we're doing a retest to potentially continue pushing up towards, 153 even, which is like around 40 pips away. Right now, we need some confirmations on the smaller time frame, like the 1 hour time frame and 30-minute time frame, if this bullish move actually makes any sense. Right? Let's take a look on the 1 hour time frame now. All right, looking at the 1 hour time frame, we have the same zone right here plotted. Look, we had a resistance on the 1 hour. We broke above this area. We're potentially doing some sort of a retest to continue pushing up. But we need some confirmations on the 30-minute time frame now, because this candle, it means nothing. Let's take a look on the 30-minute. The 30-minute is very, very interesting. We created a resistance on the 30-minute. Now we basically need to either break above or we need to break below, break below this area. It's very, very tough here on the 30-minute time frame. Whenever you see candles like this, I think it's much better to wait for the next candle to form so you can see some sort of much more better information to see what's happening. So that's what I would want to do. I want to wait for this new candle to close so that we can have some more, better information in terms of candle structure. Let's take a look on the 15-minute. Okay, so 15-minute is also rejecting, but we also have this resistance on the 15-minute time frame. Let's stay on the 30-minute and see how we close here. The 30-minute time frame. There could be a possibility we may just consolidate right here, so that may or may not play in our favor. Or if we can break above this area, I think that's going to be pretty good as well. 152,660. Oh, there we go. The 30-minute candle has closed. This is the starting of the new 30-minute candle now. And if we are breaking above, the only problem is that this is a resistance right here, and then we have this rejection area here. So it's going to be a lot of problems, right? I guess the most important thing is going to be to wait for this candle to close at this point now. Why does it say? Why does it say you're in minus 14? Where does it say I'm in minus 14? Bottom right. Oh, minus 14. Oh, yeah, this is still the Canadian time over here. You see the time here, 10:33. So I never changed the time on this PC. Still Canadian time, but that's minus 14 in Canada. Damn, good thing I'm not over there. It's like plus 20 degrees here today. Minus 14. Yeah, minus 14 is pretty cold. All right, the candle's about to close over here, the 30-minute candle. See, even if we would have taken impulse entry, it's like 5 pips. It's nothing. So let's just wait to see how the candle's going to close here now. We're about to close in 4 simulation minutes. All right, there we go. We closed. Now, we broke and closed above resistance. We need the next candle to wick down, break above the high for me to take a trade to continue up, because if you look to the left-hand side now, we can see there is clean range to the left-hand side, looking left. See, clean range going all the way up over here, right? We need the candle to break above the high, and then we can say, okay, what, the volume in pre-New York is going to help us to bring price up, or if we can, I don't want to talk about if we can come down here over here, but I think the next best thing is to do a retest to continue back up. Retest to continue back up. That's going to be much better. Let's see if we can get that over here. This is 7 a.m. over here. So oh wow. Looks like exactly the same thing is happening like yesterday. See here, same thing happened yesterday. Price went up, next candle broke down, formed support, moved up. Same thing happening right here. Price broke up, next candle coming down, back in the range. Fake out setup. Exactly. This is the perfect fake out setup. We form resistance, we break above, candle close back in the range, fake out. This means there's a high probability for price to continue pushing down. If we can push down to this area, then there's a very high possibility for price to continue pushing further down. Because if we couldn't maintain our momentum above resistance, then where else will price go? Pushing down. But this setup is not good at all. I don't like it because the range is not that big either. Like, look, this is a what, like 11 pip range over here. Do we need to adjust zones again? Depends on where this candle closes and how this candle closes. So if this candle can close bullish, forming a support, then yeah, we can adjust the zones. But it's still open right now. We got about 10 simulation minutes left here. So let's just see how this candle closes. And then we'll see if we can do something over here. So we got about, if it breaks previous candle low, you cancel out impulses. Yes. All right. So we're coming down to the support area here as well. So let's see. Let's just forward this to the close. All right. So this is where the 30-minute candle closed, right? Now for this, it's very tough because even if the next candle goes down, this is a rejection area right here, right? We need to break below this wick for price to continue pushing down. Because at one point, this big candle was very, very bearish, but it rejected this area. That means it rejected the price level to the right-hand side, 152, 480, 490, 152, 500. This whole price area is a rejection price area. So even if the next candle comes down in this vicinity, it can reject this area. So we got to be very careful if we click our buy or sell buttons. So yeah, we gotta wait. See, it's breaking the low, but we don't know whether it's going to reject this area or it's going to continue pushing past. This simulation is a lot of patience game here now. I mean, Monday we had nothing. This is Tuesday. Tuesday's playing around. This is NY Open at this point. I mean, what are you trying to do over here, pound yen? If this candle can close bullish, then I think we're going to have the same setup we had right over here. Price closed bullish, took a buy, price went up, took profits. So, yeah. If this candle is closing bullish, I think we can continue up to maybe retest this high in this 20 some odd pip range over here. Yep. We'll see. Let's see if we have any news over here as well. We have CPI. Okay. We have USD CPI. And in the future, in the future events, we have pound CPI. That's tomorrow. Interesting. CPI coming in about 2 minutes. And there we go. 3, 2, and we're going to stop at about a few seconds before. Oh, we didn't stop at about a few seconds before. All right, awesome. Whatever. So now, this is the same scenario that happened the previous day right here. We created support, we moved up, right? So now we can adjust the zones. This is going to be our resistance because we're looking at the fresh price action, and this is the fresh price action. Now, this candle is moving up. Obviously, it's the news, so we don't know what's happening. The ideal scenario is going to be if this candle can wick down and then continue breaking the high of the previous candle. That's going to be a good idea for price to continue pushing up in this, it's very tough, man. Like, there's no ranges here. Today we have no ranges, but yeah, I mean, that's the idea. If it moves up like this, whatever. Oh, wow. In the first few seconds. Yeah, I'm staying away from this. Look, the first 10 seconds. All this happened in the first 17, 20 seconds over here. Damn, so tough. Wow. Yep. Big range, lots of volatility. Look, this is happening in the first 1 minute. So it's better to just stay away in this first 1 minute. Yep. Very tough. Very, very, very tough. Let's take a look on the 4-hour here. Yeah, I don't know. This news is very tough. Look, we're creating a resistance here as well. Looking at the 30-minute time, there's a lot of volatility here. This is the same 30-minute candle. It's been 3 minutes here in this 30-minute candle. Let's speed it up here a little bit. Look on the 15-minute time frame. Wow, yeah, it was just news. Interesting. Looking at the 4-hour. Yeah, we don't. The 4-hour candle is also gonna close in about 20 minutes. Let's just see how it closes. We're gonna move on to the next 30-minute candle, and the 4-hour candle has closed, 1-hour candle has closed, and the 30-minute candle has closed. Very, very, very difficult. I have absolutely no idea. No idea. We basically want the next 30-minute candle to break above this high to continue up. That's basically what we want. The 4-hour is, we have clean range to the left hand side. Yeah, nothing. According to the 4-hour, if there's no news, then I think this is a good 4-hour candle when it's breaking above the high. Yeah, it's good, but also look at how the 4-hour candles have been moving up, right? There have been no pound news, so it makes no sense for pound, especially on the high time frame, the 4-hour, to continue pushing up. Look, we had 1, 2, 3, 4. This is the fifth 4-hour candle moving up at this point, right? And I mean, technically, and if you look at the chart cosmetics are that there has to be a balance in the charts, right? For the amount of price that goes up, the obviously like the half amount of price has to come down for a retracement, because price just can't keep moving in one direction over and over again without any news event. So there's no news to push pound. There's nothing happening. I mean, it's just very tough at this point. If we do break above this high, the previous high, then that's just going to be a continuation. But what was the USD news? CPI. I don't know what it was. Lower than expected. It had a little bit of effect on pound yen, but that's about it. Nothing that we could say was long lasting or whatever. Yeah, let's just see how NYSE opens over here. NYSE. NYSE. Maybe we can do a little bit of a retracement or something on the 4-hour. See, the 30-minute candle has closed back in the range now. How big is this? It's like a 14. Yeah, it's like a bigger range, right? Fake out range. Yen and USD are correlated, though. Is safe haven? Yes. So, so we're just going to talk about this right here, right? Okay, let's just get this one simple thing understood. It was the USD news. USD news had a tiny impact on pound yen. That's it. On the normal day, you do stop trading NY Open. Yeah, sometimes I do go into NYSE, but as we can see right here, we're getting this fake out confirmation here now, right? And it's a bigger range here as well. Look, we had a resistance formed, price broke and closed above resistance, next candle closed back below resistance, right? Now, second step is to measure the range. If we measure the range, this is almost like a 18, 20 pip range over here. So I think it's ample range to get at least 10 pips out of this. So yeah, I think this is going to be a very, very good idea to take a fake out trade. The stop is going to be above this candle, which is 12 pips, nothing big. So we're going to do with our regular risk now, 2%. We're going to go with a 12 pip stop, and yep, perfect. Fake out. This is a potential fake out right here. And if this is a fake out and it is NYSE, and with NY Open we couldn't maintain this move up, but with NYSE we're coming below this area, then I think there's a very high probability for us to at least tap into 152,500. And I guess this fake out, it could also be a retracement on the 4-hour here as well, a little bit, to retest this area that the 4-hour basically broke above. Oh, wow, okay, it's really moving now. 8 pips, 9, 10 pips. We got to come down towards 552, 560. Oh, wow, very nice. Okay. So we're going to close partials. We're going to close 90%. And we're going to put our stops at break even. And we're going to let it run. Oh, hold on. What's going on over here? 1 hour, it's breaking below. 4-hour is breaking below the low of the 4-hour candle. Oh, take a look at this now. 4-hour candle, it respected the high of the previous one, but it broke the low. That means it's in a downtrend at this point. Damn, what's happening over here? This is just a runner here now. 40 pips, 44 pips, 42 pips. Yeah, this was a fake out trade, and this is basically the runner, which is running at this point. I'm not sure if we should move our stops over here. I think we should move our stops above this 30-minute candle. Yeah, right here. What was your TP for the runner? 12 pips, 1-to-1 risk reward. So this is the runner now, which is running at about 1 to what? Almost 4 risk reward. Yeah, this is running into about 1 to 4 risk reward now. So awesome. So so we're gonna go towards the Asian session and we're gonna let this run, right? We're gonna let this run and we're just gonna close our eyes and move to the Asian session now. And this is the Asian session. Sometime like we look at the price and holy 130 pips. This is where you see a post on Instagram. Well, guys, I had a runner and the runner went into amazing, right? So look, the runner gave us extra 2%, right? So we're going to close this right here because this is where I look at the trade and now we become the professionals in Forex, right? Done with the trade, get a Mercedes or get a Lamborghini and say, look, guys, join my signals and you will win all the time. But it was just a runner. We let it run. It moved down through all this. Look at this consolidation to the left hand side, right? Through all this consolidation it ran through. Maybe this was the time when they were bringing out new lockdowns or something, or maybe the Omicron came out. I'm not sure. But that's what happened. So let's move on towards our New York session here now. Yeah, same pre-New York. Did you check if there was any news? No. There was a CPI news on pound. Oh wow, still moving further down over here. Okay, this is London Open. We have pound CPI. Oh, we had pound CPI earlier on. Okay, an hour before. Should we start with the daily every time we come to the charts? Yes. 4 a.m., 5 a.m., 6 a.m. All right, let's start off with the daily now. Right, looking at the daily time frame, we can see that the daily candles were consolidating for 1, 2, 3, 4, 5, 6, 7, 8, 9. The ninth candle broke below this area. If the ninth candle broke below this area, this means there's maybe some room to continue pushing down here in the daily time frame. Let's take a look at that. Let's take a look at that on the 4-hour now. Looking to the left-hand side on the 4-hour time frame, we have a lot of problems here on the 4-hour. Look at all this consolidation to the 4-hour, right? Look at all this mess. I don't like this at all, right? But the momentum is bearish. The trend is bearish on the 4-hour. So what do we got to look for? We got to look for resistances formed on a small time frame and some sort of a confirmation on a small time frame for price to continue pushing down at this time right here. So let's take a look on the 1-hour time frame. Looking at the 1-hour, we have a support right here and we have a resistance forming right here. And we have the 1-hour candle closing below support. If we have the 1-hour candle closing below support, maybe the next one has to respect the previous high and continue pushing down. And now let's take a look to the left-hand side and see if we have some more information. We're going to put our blue line right here and we're going to go towards the left-hand side. Oh, wow, man, this is tough. This is so tough. Like, look, how big is this range? It's like a 17, 18 pip range, but look at all this consolidation over here. This consolidation is not good. Not good at all. We would need some sort of some sort of a stronger move here. So let's take a look on the 30-minute time frame, see what we can find here. Now, looking at the 30-minute time frame, 30-minute isn't really giving us some sort of a technical indication that price should continue. Now look, we're creating a support on the 30-minute. We broke below a support on the 30-minute. Look, this candle came down to support. This candle broke below support, right? And then we have this resistance forming right here. Now, if we want to measure this range, this is a, oh, okay, this is a 27 pip range. It's like a semi big-ish range for price to move. And then you got a smaller range right here. So maybe it's going to be better to wait for price to probably break this support. If we can break below the support, then I think there's a probability that price can continue pushing down, or if we can, yeah, nothing. There's nothing happening over here. It's very tough. We either need to break down or we need to break above this area to come into this 27 pip range to potentially move up. But so far it's nothing. Very, very tough. Yeah. Yeah, I think we'll need to break below the support to continue pushing down. Oh, we're rejecting. We are rejecting right here. All right, there we go. Now, this is the next 30-minute candle. Let's take a look on the 1 hour time frame. This gets very, very, very tricky now. We know a few things. The number one thing is that there is volume to the downside, right? Momentum is down. So let me write this down. This is how sells make sense, right? Where is the trend? Trend equals bearish. Momentum equals bearish. Volume time. Is it volume time? Yes. We're coming into pre-New York, and then we have NY open. Next, we need confirmations, right? Next, we need confirmations. So these are the things I'm looking at this point. We need confirmations. On the 4 hour time frame, we broke below this 4 hour support, and we have the support hit next, like, 151, whatever. It's like a 16, 17 pips away. 1 hour time frame, 1 hour. Now, 1 hour candle hasn't made a top wick, right? But the 30-minute candle has closed bearish right here. So we can, man, I think a really good impulse entry is going to be if this new 30-minute candle can break below the low, we can have the stops above this, and then potentially we can continue pushing down. That's something we can maybe look at this point. So yeah, I guess that's what we're going to focus on, because we have the trend bearish, momentum bearish, time of volume, yes, confirmations. Confirmations is going to be an impulse entry for price to continue pushing bearish through the consolidation we have. Oh, look at that, right? So this is going to be an ideal scenario to take a sell for price to continue pushing down. And our stop is going to be around 9 pips over here. So 9 pip stop over here now. 9 pip stop. We are well into the 30-minute candle. You can look at this. It's we're in 10 minutes in. So yeah, we should let this run. We're breaking below this low. We have trend bearish, and oh, very nice. We're coming down over here. The candle is about to close. There we go. Candle has closed bearish. Now this is the new 30-minute candle. If the trend really is bearish, this should continue pushing further down. And then we can secure our positions looking at the 1 hour time frame. We're bearish. 4 hour time frame is also bearish. We're coming down to that support. Oh wow, very nice. Look at that. My throat's going bad. Okay, so we're going to secure 90%. We're going to put stops at break even, and that's it. 4 hour candle came at this area. It's good to secure positions at that point here as well. 30-minute is still open right here. This is a very, very nice move over here. Continuation. Now see this new 30-minute candle, for it to continue pushing down, it does not need to break the high of the previous one, right? So we will modify the stop loss right over here, because now it needs to respect this high if it's really going to continue pushing down. This is where, when you come to the charts and you look at this, you're like, okay, you're late to the market. This is where you were at the market. This is you're late to the market, unless if we get some more confirmation or whatever. But this is where you're late to the market, because as we continue pushing down, right, the chances of it doing a retracement, it becomes higher. With GJ moves like this month, yeah. All right. Yeah, look at the 1 hour here. We're still continuing to push down here. Very nice. We're basically starting to consolidate now. This is NY open at this point. It's a Wednesday hit. Oh wow, look at that move. Damn. Straight move down, but total of only like 13, 14 pips. This is 8:30 a.m. at this point. Pretty good so far. 8%, um, 1% risk, 2% risk. One runner really moved a lot, so that was pretty good. Oh wow, look at that straight retracement over here. Yep, don't like that. So basically the trade's done. Let's move on to the next candle. We close back in the range. Oh damn, what's happening over here? We're doing a straight retracement here on the 4 hour time. Broke above the 4 hour high and yeah, nothing. Basically up, down, arranging. You can look at the time, just arranging. So let's move on to the next day over here now, Thursday. This is, wow, look at that, nothing. This is London Open, 3 a.m. Eastern, 4, 5, and 6. 6 a.m. Eastern right here. So we're gonna remove all analysis, remove all zones. We didn't have any chance to manage our risk because we took profitable trades here so far. We waited. Right now, okay, let's start off from the daily now. Remove all analysis. Okay, looking at the daily time frame, the one thing that we can see here now on the daily time frame is that the previous daily candle tried to move further down, came down to the support and closed with the rejection area. Right? So this means that this daily candle has a smaller body and a big wick. Now this means that there's probably some sort of an exhaustion happening here as well for the move down. So maybe we could continue pushing up, but we need some confirmations. It's not confirmed at this point. Looking at the 4 hour time frame, obviously we're creating a support here. We have one rejection right here. We have another rejection. We have another rejection right here with a small bullish candle. This 4 hour candle started an hour ago, so we don't know whether we're gonna continue in this 4 hour range. How big is this range over here? This is like a 34 pip range. Pretty big range to be honest. Let's take a look on the 1 hour time frame. Looking at the 1 hour, we have a support formed and we probably have some sort of resistance right here, which we can't see because we have these wicks. So I think we need to take a look on the 30-minute time frame for this one, because we want to see in more detail what these wicks mean on the 30-minute time frame. So on the 30-minute time frame, we have this resistance right here. All right, so we got this resistance. We have this support. If we can break above this resistance, there is pretty good range, 24 pip range for price to continue moving up. So I guess it's set. Buys above 151 300 for price to move up, or sells below 151 for price to move down, but this is only like a 17 18 pip range over here. So we'll have to wait for this 30-minute candle to basically close to see whether we're gonna continue moving up or are we gonna continue to move down. So let's just wait and see what happens over here. If we do break up, I think that could be a pretty good trade idea for price to have some volume. But if we don't break up, then this is going to be very difficult. See right here? See the way candles are forming? Nothing, right? Just consolidation, just very, 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 very tough, right? So we need a candle to actually close above this area to have some sort of a confirmation that we should continue pushing up. All right. Do we have any news? We have, we have USD core retail. Retail sales are not gonna affect price as much. Retail sales data, yeah, I don't think it should affect price as much at all. So, okay, there we go. 1 hour candles have also closed. Now, looking at the 1 hour time frame, this is very, very, very interesting. Now, you guys have to understand this concept, right? Whenever you're looking at multiple time frames, you're taking information from all the time frames, you're putting them together, and then you're formulating a trade in your mind, and then you're putting that into perspective into the chart. So looking at the 4 hour, right, this 4 hour candle, if we take a look at this 4 hour structure, can we visualize this 4 hour candle to potentially move up like this? You know, keeping in mind that we had rejection, 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 rejection. Just a very, blunt idea, something to throw out there. Because if we're having these rejections, then there's a very high probability as we move into NY Open, NYSE Open, we could have a 4 hour candle formed like this. So what we would need to see on the 1 hour time frame to have a 4 hour candle formed like that. Looking at the 1 hour time frame, we would now, if we're going to continue moving up, I think we would need this 1 hour candle to break above the previous 1 hour candle's high, respect this low, continue moving up, respect this wick, and then we could probably come up to this range. That's something we need to see on the 1 hour candle, whether it's going to be with this new 1 hour candle or the next one or the one after that, but that's something that we want to see. Now, for us to say that, we have a resistance formed on the 1 hour time frame, right? Looking at the 30-minute has some more problems, right? 30-minute has a 30-minute resistance right here, and this resistance is a wick on the 1 hour time frame. So this is what you got to see. Either you're going to take a trade based on a 1 hour time frame for the candle to move up, or you're going to wait for the 30-minute to break above 151.280. The first one, once it breaks above the 1 hour, is going to be riskier, but it's going to be based on the 1 hour confirmations, right? And it's going to be an impulse trade. The 30-minute is going to be more safer, more conservative trade, because we're waiting for the candle to actually close above 151.280. So we're going to execute on both if we do get that. If we break above the 1 hour, we're going to enter 1%. And then if we get a confirmation on the 30-minute, then we're going to enter another 1%, bringing our total risk to 2%. Make sense? But realistically, both of those trades are going to be two very different trades. Because every time you're adding a position, it's like you're taking another trade. Oh, we're breaking up in the first. If the price breaks up with no wick to the bottom, will you enter? I would still want to enter 1%. I would still want to wager something because we're still up 8%, right? We're up 8%. This is something you have to really understand. We're up 8%, so we can use some of these percentages to take something riskier. Does that make sense? Right? We're leveraging some of our wins to make more money in something that we know has a higher probability to continue. If we were at, let's say, like 1% profit or 2%, would never do this at all, right? So this is going to be an impulse. Stops are going to be below the previous 1 hour candle, right? This is what? This is like a 11, 12 pip stop over here. So we're going to do a buy at this point. The 30-minute is going to be based on if the 30-minute candle closes above this area, right? So again, this is based on the 1 hour time frame. I explained it like in great detail. Why, when, how, what's the reason in terms of risk, risky, non-risky, aggressive, right? So 30-minute candle, 30-minute candle actually closed right here. See that 30-minute candle closed above this area. The new 30-minute candle is pushing up in the first 2 minutes. Are we late? I think we're late to this. All right, so we're just going to close partials right here, close 90%, and bring stops to break even. Now, if price is really going to push up, it has no business coming back into this range. It needs to do its little retest, and then it needs to just continue pushing bullish. But yeah, I don't think we had a chance to add another 1% at this point for price to move up. Yeah, I don't think so. We got that chance. Looking at the 15-minute, no, we didn't get that chance at all. But looking at the 1 hour, you can see this candle, the way the candles are formed, we've all seen this a lot, right? Candle closes with the, like, exhaustion candle. Next one breaks above the high, take impulse entries. If we break above the high, we move all the way up. And the same time we move all the way down if we break below the low. But this specific candle pattern is something that, some of you guys who've been watching the charts, you have seen that in the past. So now theoretically, we should do a retest and then continue pushing up. So we shall see how well that retest happens. Oh, we've seen this in the simulation. Price breaks up, next one comes down, and then goes all the way down. Now, this is the new 30-minute candle now. Look at the way it's moving. This is the retail sales data just came out, and just, wow, man, incredible. Just no chance at all. But look how the 4-hour candle is forming here as well. Just exactly the way we had thought it would based on these rejections to the bottom side. Very, very, very difficult based on candle entries here. Went straight up to fill that range here as well. This would have been 13, 14 pips away over here. The candle is going to close. Let's see how it closes. 30-minute candle closed, rejecting that area. So yeah, big range above 500. Yes, massive, massive range above 500. Was really hoping we'd get a close about 151, 500 to go all the way back up. 44 pips, but yeah, look the way candles are forming over here. Just not good at all. Swing trade to 500. I don't think so, because 4 hours still consolidating. I guess what we can do is maybe we can have a buy stop above the 4-hour consolidation. Would you buy stop when you have enough range to the outside? Yeah, so maybe we could have a buy stop above the 4-hour candle and sell stop below this area. Yeah, I think that could be pretty interesting. Do you use software to measure balance percentage to quick TPs? I don't delay going. Yeah, Magic Keys. Magic Keys helps a lot. So I have a custom button on my Magic Keys. It's called Close Custom. So when I press that, it closes around 90%. But if I'm up for the week, like let's say right here, we're up above, 9%. So I think it's going to be extremely beneficial to maybe use a, buy stop or a sell stop. Yeah, let's do that. So we're about to, wow, we're coming down over here hard. I'm not sure what price is trying to do, but we are coming straight down over here. So let's, where do you set your stop on a buy stop for swing? Okay, looking at the 4-hour, the buy stop is probably going to be right over here, around 53 pips up. So we're going to do a buy stop around 53 pips. Stop is going to be around 30. Buy stop right here. Sell stop. Sell stop is difficult because even if you want to have a sell stop, you'll sell stop even if it's below this wick. This wick is like 16 pips away. So even if your sell stop gets activated, price can come down, price can reject this area and move on back up and stop you out. And if you have a sell stop below this wick, your next range is like, 30 pips away, 20 pips away. So yeah, I'm not sure I'm going to use a sell stop because this is like, not that far away at all. Buy stop looks way better because we have a lot of range here. So we're going to leave it at that. And then we're going to move on towards our why 30 pips, the stop loss, because it's within this zone. Once it breaks above, it has no business to come back into this zone. That's why. So it can be 20 pips, 25, so giving it a little bit of a room. Room to breathe, man. You got to give price room to breathe. So let's move on to the next one here. All right. Moving on towards London session. Oh, wow. Look at that 4-hour candle here jumping around. Buy stop about to get activated. Oh, buy stop is activated. But remember, we're still sleeping at this point. We're sleeping, and we're going to come on the charts when and my open starts. We're still sleeping right here. This is 3 a.m., 4, 5, 6. 6 a.m. Eastern. We come on the charts, and what we see is that our buy stop has been activated, and we are zero point 0.3 pips in profit. Beautiful, right? We're making profits here. So looking at the daily time frame, daily looks pretty good in the case to see that, okay, look at this, right? This candle broke below this daily support, came down. Next candle formed a rejection. The daily candle after that formed another small rejection right here. And this is the Friday daily candle. It broke above the high of the previous daily candle, and we're bullish at this point. Now, if you were to just take a look at this, right? Take a look at this. Can we all agree that this daily candle is going to be better for it to form, maybe like this, move up? We're creating a support, so ideally this is what it should look like. But now we need confirmations on the 4-hour time frame and a 1-hour time frame, and then we got to see what we're going to do with our buy stop right here, which got activated. Now looking on the 4-hour time frame, we do see that we broke above this resistance. This 4-hour candle is respecting the low of the previous one, but it has to move bullish to really substantiate our ideas for buys. Looking at the 1-hour time frame, 1-hour has a lot of problems over here. One problem is we have a support down here. It's kind of like, wicking into that area. Looking to the left hand side, we're basically consolidating. We have a lot of wicks right over here as well. One thing we need to do is to maybe move our stop loss. So we're going to do that first. We're going to modify the stop below the previous candle. Accept. And now we're going to go towards our 30-minute time frame. Now, looking at the 30-minute time frame, this does not look like an ideal scenario to keep this buy open, right? So I'm going to close this buy because it makes no sense. Let's move all over here. Now, 30-minute time frame, we're going to close this buy, and we're only going to focus on what we can see at this point. Now, we got to do some analysis here on the 30-minute time frame, right? And looking at this, we have obviously created some sort of a resistance, and we have some sort of a high right over here where price can potentially continue up to retest, right? So that's something we see at this point. Secondly, we have candles rejecting the support. So what do we want to see? Let's take a look at this on a 15-minute time frame here. 15-minute is bullish. We have a resistance. Yeah, I think we need to see some sort of a candle to maybe break below this support for price to push down, or maybe a bullish candle to give us an idea for us to move up. But this rejection is something that scares me, so I guess we gotta wait. Whenever you're confused, it's better to wait for the candle to close. So that's what we're gonna do. We're gonna wait for the candle to close. So what better idea there is to wait for the 30-minute candle to close? All right, we got 15 simulation minutes left over here for the 30-minute candle to close. And we're going to see how we close over here. Oh, wow, we're breaking below this area now. We got 3 minutes left, 2 minutes left. There we go. The 30-minute candle has closed, and we have successfully closed some sort of a rejection candle right over here, right? Look, now this is awesome. This is also becomes a little bit of risky trade, something that I like to take sometimes, that we have a rejection here, rejection here. Now we got to see at what time there was rejection here. This rejection was around London Open. Now, London Open is a very, very high volume time. There's a lot of volatility. There's a lot of volume at that time. If the London Open rejected this area, right, what's the probability that pre-New York will also reject this area, right? And if we say there's a high probability, then we got to take a look at the candle confirmation. And the only confirmations we get are these candle rejection number 1, rejection number 2, right? Now we got to visualize the trade. Now, I think a good trading idea would be if this candle respects this low and breaks the previous high for price to continue pushing up. That's going to be a great trade idea, a great impulse entry trade idea, I must say, for price to go, right? And then we can say that, oh yeah, you know what, daily is bullish. We have a rejection on daily on Thursday and Wednesday. Looking at the 4-hour time frame, 4 is also doing a retest at this level. 1-hour time frame is 1 hour is whatever, but the confirmation we're getting is on the 30-minute time frame. So now, if we take an entry once we break above this high right here, our range is like 15, 16. With now, here's one thing. Even though we have a rejection here, we have this wick to fill. Wicks only get filled when there's momentum in the market, when there's volume. So if you look at the time, we are in a volume time. So yeah, I guess it's going to be better to wait for price to break above the high of the previous candle. Take an impulse entry. Since it's going to be an impulse entry, we're only going to go with 1% risk, because impulse entries are risky trades and you got to cut your risk at impulse entries. So either we close bullish or we break above the high. I guess we're going to break above the high right here. See this? This is 15 more minutes are left in the 30-minute candle to close. So what's the probability this will close bullish and the next one will continue pushing up? I think there's a very high probability. So this is where the impulse entry is going to go. Stop is going to be below the current candle, which is like around 9 pips. Pretty good. So take a buy over here. And yeah, this is an impulse entry right here. Let's take a look at this. Running very nicely. 4 pips, 5 pips. We should continue this momentum coming into pre-NY volume. This is the new 1-hour candle starting now. Look at this 1-hour candle, right? We closed bullish, but we closed below resistance. Looking at the 4-hour hasn't really gone bullish, and I think there's a very good possibility that this 4-hour candle can continue pushing bullish. Looking at the daily, we're still bullish. 30-minute candle is still, there. So let's just wait for the 30-minute to close, because the worst that can happen in this trade is that we can lose 1%, right? And that means our week is going to end with 8% profit. The best thing that can happen is that price can continue pushing up and we can make way more than 8% profit on the week. So it's going to be better to wait for the 30-minute candle to close over here to see what's going to happen. And also I think the 1 hour, 1 hour is coming down over here. The 30-minute candle is about to close. There we go. The 30-minute candle has closed bearish. What are we going to do? Manage our risk, right? So we're going to close 50% right here. Close 50% right here, right? So we're managing risk at this point. Now, look at the 1 hour candle, right? If for some reason, I don't know. What I'm trying to say is if we do end up breaking above to fill this wick, I think that's where we can add back our position that we closed. But if we don't, then we don't. Oh, it looks like we're going to move up over here. Are we going to break? We are breaking above the high here in the 30-minute time frame, right? If you look on the 1 hour, 1 hour is also breaking above. We're moving into NY open. Now you got to ask yourself, what's the probability that this candle can fill the wick here to the left-hand side versus it can go all the way back down? I think there's a very high probability we can continue to push up. So that's where, would you manage risk if a smaller time frame, 5-minute, 15-minute close against you on gold? Probably, I don't know. Depends on how the candle is closing, how the 4 hour is, how the other time frames are. There's a lot of, we got to take a look at a lot of variables at that point. So right here, I think it's going to be a very good idea to add that position back. So we're going to, since it's a Friday, we're going to add it back over. So what the stop's going to be around, what, 10 pips? 10 pip stop. We're going to add that back. And looks like that was a bad idea. But yeah, I'm still going to wait for the candle to close over here. I have a lot of faith in this. Oh, nice. Look at that. We are moving up over here now. The candle is also about to close. If we can close bullish, amazing. Amazing. Wow, look at that. This does not get any better than this. This is like the perfect opportunity for price to continue pushing up. Look at this 1 hour candle, the way we close. Bullish, right? Very good possibility for price to continue to push bullish. So we're going to secure this one right here. We're probably going to close everything on this one, and we're going to let the other one run. The new one that we have open. Very nice, very nice. It's moving smoothly now. We gotta move our stop loss. Let's move it to break even. We're at 8 pip profit, 9 pip profit. This is a very tough area here. Very tough area. Strong rejection. We don't know whether price is going to reject this area or not. This is very difficult area to pass through. But I think this simulation was a really good test on patience, waiting for candles to close in your direction, especially looking at the high time frames and looking to see whether we can get some confirmation on the small time frames or not. We're about to close. Oh, that's where we closed. So yeah, I guess if there's more volume we can move up, but if not, then yeah, this was a tough week. This is a very tough week, especially Monday consolidation, Tuesday consolidation. Oh, we got stopped out. Tuesday consolidation. Wednesday we had a very good move. Let's take a look at the stats right here. Yeah, let's take a look at the graph over here. We had some, runners got stopped out. We continued to move on, had some consolidation. This was the big trade we had in the week. Looking at the stats, realized profit $721, $721. Yeah, not bad for a $7,000 account. Making $700, pretty good. 10%, very nice. So thank you all for. Oh wow, look at that. We're continuing up now after we got stopped out. We broke above the high right here, same idea, and then we moved up around what, 8 pips, 9 pips, nothing. Oh damn, look at these next ones. Continued all the way down. Fridays. Anyway, thank you everyone who showed up. I really appreciate it. This was obviously recorded. It's going to be in the database. It's going to be in the database in the next 4 to 5 hours. It's going to be placed in the simulation session. We're going to see you guys on Monday. So have a great weekend. Hope everyone stays safe, stays fit. Adios.